According to my parents, my first ever school report card concluded with the sentence, "At least he knows the nativity story now." Well, in today's Fat Tail Daily, my old friend Callum Newman is preaching about resurrection stocks. It's a new story to me once again. Callum, what on earth are you talking about?
Well, I'm glad to hear you got a good report back in the day, Nick. That's very encouraging. Resurrection stocks. So the overall dynamic that it's been in play for a while now is the market recovering, and that's been the case since about October, November last year. So the Aussie market has pushed up into all-time highs in the last 12 months, and we've seen that play out individually with a lot of stocks, especially in the sector that I cover, which is the small cap sector. So I just make the point in today's article that a lot of stocks got absolutely hammered over 2022, then they were down in the dumps in 2023. Over 2024, they're starting to lift back up. And what we're seeing now with some of the results coming out, the half-year results coming to the market or the quarterly updates from these companies, is that they are actually improving and growing, and the market is rewarding them. So as an example, I talk about in today's piece for Fat Tail Daily is Judo Bank, which is trades on the ASX as Judo Capital Holdings, but it's a bank. And they're growing at a better rate than the big banks. So the reaction to the big banks is those stocks are going down while Judo is going up. And this is a perfect example because Judo was listed on the market in 2021, I think it was. It went down for a couple of years because it got caught up in the bear market, the small cap bear market. And now it's pushing back, and it's almost ready to break out into a new high that it hasn't seen before. So it's looking pretty good for them.
It sounds like you treat small caps as their own sector, right? So you've got the bank sector, the materials sector, which includes mining. You've got all these different sectors, energy, and so on and so forth, consumer discretionary, consumer staples. It's as if small caps trade as their own separate sector because there are times when people are willing to buy small cap stocks and times when they're not. Is that accurate?
I think that's fair enough. I think as a general rule of thumb, you would say that when the market goes risk off, it drops the smaller stocks and herds into the bigger ones, which is what we saw over 2022 and 2023. And even now, it's still the blue chips are still leading the small caps in terms of returns over the last couple of years. So we haven't really seen a massive return to risk appetite in the Aussie stock market. It's not like it was back in the heady days of 2021 and when the sort of inflationary boom was on and stocks were flying around all over the place and there were a lot of easy money to be made. It really is case specific still at the moment. But yeah, broadly speaking, small caps do trade as a group. But within that dynamic, there's always companies that are going to outmuscle the general market because they're doing something that's either more exciting or more profitable or something that can drive them higher.
I find this a fascinating admission on your part because I'm used to small cap enthusiasts saying, we don't need to spend any time thinking about macroeconomics or valuations or what's happening in the blue chips. Small caps work based on the basic business idea of whether they're going to be successful as a business or not. And it doesn't really matter as much what's happening in the wider sector. But you're combining the two analyses from the two almost opposite sides of analysis. We call it top down and bottom up in the investment side. So take us through how you do use macroeconomic shifts and macroeconomic ideas to inform your investment decisions, even in the small cap sector.
Well, I can tell you that macro was very important in 2023. It was just the market was gripped with concerns about a US recession, and that kept a lid on a lot of stocks. It didn't really matter if they were doing that well or what they were doing because the market was just not prepared to pay up because it was too worried with what was going on in the general world. I think we're breaking out of that dynamic a little bit in the sense that now companies are rising even in the face of all the concerns that we hear about, primarily at the moment being Trump tariffs. So the way I use macro analysis is just to try to get a sense of what the market is grappling with and how that could play out. So, for example, in 2023, when we did the speech for the Fat Tail Alliance group of people, I made the point that a lot of stocks were priced for a Chinese real estate collapse and a US recession, of which neither was likely at the time. So you could actually take that macro concern and turn it into an advantage, because the odds by that stage were saying, well, it's not going to happen. So once those fears roll back, you'll get an uplift in the stocks as their pricing improves, which is what happens. And then you look at today, even now, what's the one sector that's really firing at the moment? That is the gold sector. And that is all driven by the macro dynamic around the world of the US deficit and China and the other central banks moving to protect themselves by going to gold. So absolutely, you can take the macro view on gold, but also the fact that gold miners are just making a lot of money right now because the gold price is so high. So you put them together, and then the place to be is gold.
You briefly mentioned there an idea that I want to drill into, which is that you can identify where in the cycle we are based on how small cap stocks react to their earnings and to macroeconomic news. And your article today in Fat Tail Daily talks about how, as you just mentioned, Judo Bank outperformed the broader blue chip banking sector index. So what other indicators do you use? And tell us about how you use that one to tell us where we are in the macroeconomic cycle.
Well, you can do the reverse. So go back to 2021, which is when I began to get worried about where the market was going, because stocks would release good news and they would go down. That was in the back half of 2021. That was happened to the small caps first. So it became obvious that it was going to be very difficult to generate alpha if a stock could release a good update and go down, because then it was a question of like, well, how am I going to make any money? The risk is double. If it releases bad news, it's going to get smashed, which is pretty much what happened to a lot of stocks. So I took late 2023, when I did that speech, I had a broad framework that I got from a guy called Colin Nicholson, who says a bull market moves in 3 stages as a broad guide. The first one is reviving confidence. We saw that last year as those fears roll back that we just talked about. The second stage is increasing earnings. So the market will chase for companies that can grow their revenues and their profits, which Judo Bank is an example, so that it is growing in this particular framework that we've got, and the market is prepared to bid on it. You can see it in the gold sector. Those guys are making more money. The market will bid up on the gold stocks while that continues. The harder part in Australia is we just don't have that many industries firing at the moment. And so you're getting a lot of stocks go sideways or not really doing that much. And the big banks are going to become probably an example of that, because whilst everyone is not so worried now about a real estate collapse or a lot of bad debts, they just don't have the revenue growth anymore to keep driving those share prices, which is why they're pulling back. So for the moment, if you can find companies that are doing that, growing their revenues and profits and market share, the market should bid on those. So there should be a long sweep of opportunity to chase over the next couple of years while that plays out.
Sounds like a resurrection, but let's dig into your philosophy for why you focused on small caps, regardless of the cycle that we're in or the stage of the cycle we're in. As I understand it, it's just because that's where the real gains are. But take us through why you've made your career's focus in that sector.
Well, as you alluded to earlier when we were emailing for today's video, that the money is usually made in the acorns and not the oaks. Perhaps the US has been exceptional in the last 10 years in that the big 7 tech stocks have continued to grow at a huge rate, and they've delivered great gains to those people. But here in Australia, if you look at the top 20, it's nothing like that. It's the big banks and the big miners. It's the same stocks generally doing the same things and not really growing that fast. So as a shareholder, there's a limit to how much money you're going to make out of that. And look at a stock like Mineral Resources, where the wheels are really falling off. So blue chips don't automatically mean that you're going to make money or that they're safe in inverted, quotation marks kind of thing. So I've found small caps are the most exciting part of the market to make genuinely exciting returns. And they're also usually simpler to understand. There's less moving parts to them, so you can make sense of them in an easier fashion. And when they go, they really, really do go. So I'm trying to think of a typical example. So Tuas is a stock I recommended in 2023. That was, again, taken down in the bear market selling. But when you looked at the fundamental factor of who was behind it and what they were trying to do, it was just a screaming buy. And now that particular one, as idea, works really well, but it's up 450%, and it's could keep going. So I don't know of many blue chips in Australia where you can get a look at a stock that can give you that kind of return in such a short time frame. We're only a couple of years in still. So not to say that there isn't a stock that could do that, but just the breadth of opportunity in the small cap sector is so much larger and more exciting that's where I want to be.
I want to add a note of caution to that, because it seems to me that the stock market has become not necessarily the place where companies go to list to raise capital to try and grow their business to become, even larger. It's become a place where founders of companies list their shares in order to exit, to sell out, to make their money and to leave. How do you distinguish between those two different types of companies when you do the research?
Well, you've just got to take it on a case-by-case basis. I mean, you're right. When often companies come to the market, the founders are selling down. And I guess you'd say a good example of that is Adore Beauty, where the lady put it on the market and it's been an absolute dog of a stock since, but she made a killing out of it. But again, there's examples like Mars Group, which is one of my recommendations, where the Wes Mars is still involved with it. He's still the founder and he's still driving the business. And thus far has delivered a great returns since it came onto the market. So it's just a case-by-case kind of thing. But again, it always comes back to what's the upside relative to the downside. So the problem you usually have with a company coming to the market, and Judo Bank is an example of this, that it was probably comes to the market fully priced because the bankers want to get the best price for the stock as it comes in. But if you can get a look at a stock that comes to the market and maybe sells down for a reason that's not specific to that business, which is what we saw over 2022 and 23, where it didn't really matter what the company was, the general sell-off of the market took it down. And that's why 2023 was such a buying opportunity, because like Tuas, Judo Bank, all this stuff was just dumped indiscriminately because people wanted to be out of the market. It wasn't so much what was going on with them. Now, as we're talking about, the resurrection's happening because the market's going, well, actually, these are great little companies doing interesting things and we want to get on board.
Yeah, they're actually willing to bid them now. I feel like you've given us lots of reasons here why someone might want to use your knowledge and experience in speculating in this sector. The idea that stocks can move in almost opposite directions in the same result because of the different context that they're in, the different part of the cycle, that the pitfalls, like whether a founder is actually going to try and continue to grow the business or whether they're trying to make a run for it by listing, and several other issues. You've got a report, as I understand it, called Small Caps Big Comeback, which is about all of this and how you go about finding small cap stocks. Can you tell us a bit more about it?
Absolutely. So the industrial stocks I sort of picked over in 2023 and 2024. Well, is there a sector still on the ground that could resurrect? And of course, it's screamingly obvious that it's the resource market, because those junior resource stocks are absolutely hammered over 2023. In that particular report you're alluding to, I've got two resource stocks. One is gold and one's related to tin. And the tin one, I think, is, it's already moving up, but it has the potential to go on a massive run, just particular to that case. But, and again, too, the gold sector, as all this money flows through, the big ones are going to go up, buy up the juniors. The juniors have investor support if they want to do exploration or they want to consolidate, because investors can see gold prices are very high and there's a lot of money to be made. So they're two very exciting options. So the main point being that even though this recovery has gone for a year, it has the potential to keep running for several years at least. So there's still plenty of opportunity out there.
So if anyone wants to check out that report, we'll either put a link in the top of the comments section or in the description of this video. If you're not convinced, check out Callum's Fat Tail Daily article for today for more information, all the things we've discussed and some other stocks that he's also goes into in his article, which we haven't mentioned here. Cal, thanks very much for coming on, and to everyone at home, thanks for watching.
Pleasure.